Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about the 3 most common backtesting mistakes. Alright, so here's the thing about backtesting. When backtesting is a common feature that is in MT4, that is in MT5. You can just open a strategy tester and you can start backtesting. Usually people backtest expert advisors. Like these are trading strategies that have been put into a program, and they can see how it works or in the past, right? So you can backtest over a period of 1 month, 1 year, 10 years, right? But the main purpose of that is really to see, okay, I have this strategy. I have put it into a code, right? Put it into some code as a robot, right? And how will it perform in the past based on certain parameters? Okay. Now, what are the common mistakes that people tend to make? The first mistake is that they try to curve fit, right? Is this thing called curve fitting? Meaning that, imagine you have a trading strategy, right? You have a trading strategy and you can adjust things like the stochastic settings, the RSI settings, the moving average settings. There are a couple of things that you can adjust, right? One mistake that they do, and how curve fitting works, is that, they're testing it over, for example, this past 1 month. All right. When you're using the default settings, they realize that it didn't do very well. So they're like, oh man, this strategy is not really working, but what if I just tweak this one variable, right? It seems to work a little bit better. Then they tweak another variable, it works even better. Then they start tweaking maybe like 10 different variables, and then it starts to work really well. The problem with that is that it only works really well for that 1 month of data. When they then try to backtest it over 2 months, they realize that, oh man, it's just, it's losing money again. Then they try to, kind of fit it in, they tweak all the little settings here and there. And once they're done, it finally fits this past 2 months of data. Then they realize, when they try to test it over the past 1 year, it doesn't perform well. When they test it over the past, in a live, what they call a forward test, meaning that, you let it run live on the markets, it also doesn't do well. The reason is because it has been curve fitted so much to fit into that little bit of that specific data set. All right. So one thing that you don't want to do is to curve fit. And that means as much as possible, the variables that you have in your trading strategy, in your expert advisor, right? You should not deviate too much from the defaults. You can tweak a little bit of things here and there. And what the word I like to use is fine tune. Right, maybe instead of 100 moving average, use 105 or 95. Just move it a bit, but you should not be adjusting too many variables, because if you think about it, for every variable that you edit, right, there's an exponential effect, right? So if you have edit 10 variables, you're literally having like 10 times 10, 100 different variables just to kind of curve fit the strategy. So remember, try to stick to the default strategies. If it works, fine tune it a little bit more. Don't edit too many parameters, just to fit a strategy to a certain backtesting period. Okay? The next mistake that they do is they're using bad data to backtest. Okay? I mean, MT4, MT5 does come with some data, but usually it's not good enough data. It's not clean enough data. There are a lot of free websites out there where you can actually download good quality data to backtest on. Okay, what I mean by that is that sometimes when you run, like for example, you run a backtest on euro dollar or on gold over the past 1 year, right? Maybe MT4 can provide you decent data on the daily time frame, but if you're testing something on like the 5-minute time frame, sometimes the data they get is not that accurate, right? So there are a lot of guides out there that actually teach you how to download these external sources of data that has been cleaned, right? That has been, optimized, right? So that it provides really, really good quality, right? You take that and then you put it into your MT4. If I'm not wrong, there's this under your files, there's this thing called tester. This file called tester. You can actually put a good bunch of downloaded clean data there, all right, for you to backtest on. All right, so don't go too crazy, backtesting, unless you have good data to backtest on. Usually it's a smaller time frames. You're testing on the 1 minute, 5 minute, 15 minutes, that kind of time frames. Even a 1 hour, right? You probably want to download external data because what you can get from just the MT4's database, right, might not be clean and might not be full. There might be gaps in between here and there. Okay. And the last thing I want to share with you guys about is one of the mistakes I usually see is that people tend to use the wrong type of data to backtest. Okay, what I mean by that is when you're backtesting, especially on MT4 or MT5, they have this function. They have a couple of options, right? You can do this thing called tick data backtesting, which is the most accurate, right? You can do like control points, which is not accurate, and you can do like open prices only, right? Which works in certain situations, right? So depending on your trading strategy, if your trading strategy decides whether to open and close a trade just based on, at the close of a candle, that means, when a candle is completed, that usually is okay, right? But if your trading strategy has a little bit more complexity to it, right? Waiting for like a moving average to cross over, waiting for MACD to cross over, right? There's a lot of research out there that points to you need to use tick data backtesting for that, because when you just wait for the candle to close, right, you're only taking a single snapshot of the candle. While that candle, before it closes, for all you know, price might have crossed over that moving average, might have crossed over the MACD, right, might have crossed over that stochastic, right, while the candle is still being formed and before it closes. All right, so that's the thing with backtesting. You not only need to avoid curve fitting, you not only need to get good quality data, but you then also need to know, when to use tick data backtesting, when to use open prices. Certain strategies are okay when using open prices, which is a lot faster, but certain strategies require tick data backtesting. Now, you don't necessarily need to put everything through tick data, right? Because it takes a long time for it to really test, because it's very CPU intensive, right? So yeah, look into your trading strategy, how it's being created, how it determines when to enter a trade, when to exit a trade, and from there you can then decide what kind of type of backtesting approach you're going to use. Okay, guys. Anyway, that's it for me for today's podcast on how you can the 3 common backtesting mistakes which you really should try to avoid, especially if you're backtesting certain trading strategies or expert advisors on MT4 and MT5. I hope you found it useful. Do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bring you the very best trading education to take your trading to the next level. All right, until then, stay safe, trade safe, and peace out, guys.